All right, you guys and girls. So finally, the time is here. I'm going to finally talk about how to use and what is a volume profile. So for the longest time, you guys have asked me, how do I use it? Why do I use it? And so that's what we're going to do today. I'm going to go over, I'm going to talk about volume profiles. I'm going to talk about how and why to use it. I've been waiting for a while to put this video out because I knew I was going to be going on this trip. I'm currently in Texas, away from my office in Philadelphia, so I'm unable to put out as many videos as I normally put out. So I knew that I was going to be going on this trip, and I wanted to save these more strategic trading videos on how to use like specific indicators and my style of trading for while I was away, because I'm not gonna be able to put out 4, 5, 6 videos of technicals each and every day. So overall, let's get started. Now, one of the biggest things that you guys realize that's I feel is one of the most important things, you've been watching this channel for a while, is volume. Volume is extremely important. As of right now, I have nothing on my screen as far as indicators are considered. I'm going to add a volume bar. Volume is important because you have to think of it like the gas in the car. Now, price action, or basically where the stock is going from a price standpoint in the candlesticks, is kind of like the navigation. Price action is better than any type of indicator you have because every indicator is lagging. However, price action is extremely important. Like, without having any indicators up, you can see that if I just draw a trend line from lows of last year up until right now, you can see that the price action is up. You could have basically bought and sold off of this trend line alone multiple times over the past year and made a killing on the S&P 500 alone. So price action is up. That is the most real-time piece of information that we have. Now, volume is extremely important because, number one, volume is what you need in order to push the stock up. What moves the stock to the upside is more amount of people buying, the more amount of people selling, outbidding the sellers and pushing those asks and those bids up until the stock, eventually reverses and there's more sellers than there are buyers. Now, volume is important for a couple of reasons. Like I said, number one, to move a stock. Number two, for liquidity and slippage. Slippage is something I talk a lot to my mentees about. It's something people don't really realize, but I'm not going to talk about that today. Maybe I'll make a separate video. But slippage is basically what money you lose between the buy and the ask. So if you look up here, the S&P 500 has so many shares that are traded in a single day that volume is never an issue. But if you look at the buy and the ask on, let's just go to SPY. It'll be a lot easier to do SPY than S&P minis. But on SPY, you can see the buy and the ask are 11 cents away. So the buy is, the bid. The bid is $415.40. The ask is $415.51. The spread between the two of them is 11 cents. The slippage right there is 11 cents. So let's just say you bought 10 of them, you would lose $1.10 if you just hit the bid. Now, on a stock like Skills, it's going to be way different because the volume is low. The bid is $15.30, which is what people are willing to buy it at, and the ask is $15.75. So it's there's a massive spread between the two of them, right? So volume is important for liquidity purposes. That it's easier with more volume for you to move in and out of a stock. So it's the second reason why volume is important. The third reason is, really in the options market, which I'm going to talk about another time, but you need volume for options. The problem that your traditional volume bars here at the bottom do not tell you is where people are buying, right? Where are people buying this stock? Because if we just look at it, we can see that on specific days, we had mass amounts of movement. Now, this is, of course, on a weekly chart for the S&P 500. So certain weeks had certain massive amounts of volume. You can see that during the pandemic crash here, there was nearly triple to quadruple the amount of volume that we had trading prior to that, which means there was a ton of movement. But it doesn't tell me where and what price these movements were at. Now, that's what the volume profile does. So there are different ways to do this. With TD Ameritrade, I like the way that they set up the volume profile much better. Let me see if I can go ahead and switch that over real quick so you guys can get a better understanding on why I like to use the volume profile better. Here we go. So you guys have probably seen me use this. This is TD Ameritrade Thinkorswim. I love this. I've been using TradingView recently because I think it's better to teach with, but this is the volume profile here, and what's cool about the volume profile is this will change dependent upon what time frame I'm looking at a stock. So let's just go to the S&P 500, and this will change to whatever I set it up on. Now, it's a little bit different when I use it on something like TradingView. Let me go back for you guys. And now when it comes to TradingView, I have to actually set the fixed amount of time. So you have to go up to indicators, you have to go down to volume profile, and I use fixed range. You don't really want to use visible range, because if you use visible range, a couple of scrolls on your mouse will completely change everything. So you want to go to fixed range. Once you click fixed range, you're going to want to pick the time frame that you want to do this on. So this is the past year. I'm going to click at the price and the time I want it. So this is May 4th, 2020. And I'm going to drag it all the way up to today's date. And now, this looks crazy. If you're somebody who has never used or seen a volume profile before, you are probably like, what in the hell is that? So it's not as hard to read as a lot of people expect. When I first looked at this, I was like, this is crazy. But there's a couple of major things to realize. The sideways graphs are showing at what price the stock had the most amount of volume. So you can see here, if we look at this big block of volume, this is the longest one we have. So this is where the most amount of volume has come into S&P 500 in the past year. Now, this comes in if we were to correlate and draw the line all the way over, the biggest amount of money has come in at $340 in the past year. Now, where there's these thin amounts of volume, this shows you that not a lot of people are trading at those prices. And if you look at where this thin amount of volume lines up, it's this gap. So we had a massive gap up on a Sunday, and there was not a lot of trading volume. So one thing that you're going to end up noticing across the board is that when we have thin amounts of volume, it's very easy for the stock to move through it. When we have thick amounts of volume, it is much harder for the stock to move through. Now, this volume profile tends to work as a major support and a major resistance for a stock. Now, for instance, with this, we are so far away because the market, in my opinion, is ridiculously overpriced. But let's take a look at something like Smith & Wesson. This is something I traded not too long ago. And let's go ahead and let's remove this. Now, let's just say I'm looking at Smith & Wesson right here. And I want to trade, which I did trade, I want to trade this breakout on this pendant. I still think Smith & Wesson is probably going to break out to 2150 in the next 2-3 months, potentially up to 23. Now, you have to remember too, we're doing this on May 5th, so I don't know when you're watching this. Now, what I want to do is take my volume profile, go up to my indicators, click my volume profile, and I just want to go from where this pendant started to where the pendant is currently trading, and voila, look at where the most amount of volume came in, right at $18. This acts as a very strong support and a very strong resistance, and you can see we have very tight price movement here, and we rejected 1, 2, 3 times. We used it as a support prior. Old supports become new resistances. We use this as a support 1, 2, 3, 4, 5, 6 days in a row, which then became a resistance for 5 days in a row. Then we completely broke out. The volume profile is an extremely strong indicator. And if you guys want to learn more, if you want to learn all of my setup, if you want to learn everything that I have learned in the past 7 years, you can go down and follow my private academy. It's $10 your first month. You get access to every single trade I take live with me and my team. You get access to the 1-hour stream. I stream with my mentees every single morning for the first hour of market open. You get access to our 60-hour course library, teaching you everything that I've learned in the past 7 years of running a portfolio full-time and living off the market. Guys, thank you for all the support. Hit the like button, subscribe. I'll see you guys when I get back from my vacation. Peace.